You're here because you've seen the dream, haven't you? It's 2025, and the dream is more vivid, more accessible, and more seductive than ever before. It's plastered all over your social media feeds. The 20-something with the six-figure funded account posing by a rental supercar. The celebratory screenshot of a past evaluation. A $200,000 account just waiting for you. The promise of freedom. The idea that you, with your knowledge and a little bit of borrowed capital, can finally break free from the 9 to 5, from the life you feel trapped in. Proprietary trading firms, they feel like the great equalizer, the ultimate shortcut. For just a few $100s, the cost of a weekend trip you can't afford anyway, you get a shot at real capital, a shot at proving everyone wrong, a shot at changing your life. And you believe it. You really, truly believe it. You've done the work. You've back-tested the strategies, you've read the books, you've watched hundreds of hours of videos. You know what a good setup looks like. You've even proven it to yourself on a demo account, haven't you? Watched that equity curve climb steadily upwards, feeling that quiet confidence build inside you. So you pull the trigger, you buy the challenge, and that's when it begins. That's when the dream starts to curdle at the edges. That's when you come face to face with what they don't tell you about trading prop firms in 2025. They don't tell you about the silence, the suffocating silence after you blow your first account, and your second, and your fifth. They don't tell you about the feeling in the pit of your stomach as you type your credit card information and for another reset, whispering to yourself, "This is the one," even though a part of you knows it's a lie. They don't show you the trader staring at the ceiling at 3 a.m. replaying that one stupid, impulsive trade over and over in his mind. The trade that breached the daily drawdown. The trade that ended the dream, for now. They don't talk about the strain it puts on your relationships, the secretive shame of losing money you couldn't afford to lose on a challenge you told your partner was a sure thing. And they certainly don't tell you the most painful truth of all. The reason you're failing has almost nothing to do with your strategy. It has everything to do with you. This isn't going to be another video about the best prop firm or a secret strategy to pass the evaluation. This is about the real battle, the one that happens in the 6 inches between your ears. We're going to pull back the curtain on the psychological warfare these firms wage on you, often without even trying, and why the entire model is a minefield designed to exploit your deepest human flaws. This is about why you, a smart, capable trader, keep failing, and what you must do to finally break the cycle. Chapter 1. The Great Lie. It's not a shortcut, it's a magnifying glass. Let's start with the foundational myth, the one that gets you to click buy in the first place. The idea that a prop firm challenge is a shortcut to becoming a professional trader. It's not. That's the first thing you have to burn into your mind. A prop firm account is not a shortcut. It's a magnifying glass. It's an accelerant. It takes every tiny hidden flaw in your trading, every crack in your psychological foundation, every bad habit you've managed to keep hidden in the low-stakes world of demo trading, and it magnifies it by 1,000. Think about your demo account. It's a sterile environment, isn't it? It's like a batting cage with a machine throwing perfect pitches right down the middle every single time. There's no pressure. A loss is just a number on a screen. You can take a 2% drawdown and think, "Oh well, I'll make it back tomorrow." There's no real consequence, so your discipline is never truly tested. Your patience is never truly strained. You think you're a disciplined trader, but you're not. You're just an untested one. The moment you pay that evaluation fee, everything changes, instantly. That money leaving your bank account is the sound of the real game beginning. Suddenly, you're not just in the batting cage anymore. You're standing in the World Series, bottom of the ninth, bases loaded, and the world's best pitcher is on the mound. The air is thick. You can feel the eyes of the crowd on you. Those eyes are the rules. The 5% daily drawdown, the 10% max drawdown, the 30-day time limit, the profit target. These aren't just rules. They are psychological tripwires. They are instruments of pressure, whether the firm intends them to be or not, and they are perfectly calibrated to exploit the most common cognitive biases that plague every single human being who dares to trade. Let's take the daily drawdown. On a demo account, if you take a couple of early losses, you might just walk away. It's the smart thing to do. You're not feeling it, the market is choppy, come back tomorrow. But in a challenge, that 2% loss isn't just a loss anymore. It's a chunk of your breathing room for the day. A voice in your head starts whispering, "You've only got 3% left to play with today. You can't afford another loss, but you need to make that back before the day ends." And what does that lead to? Revenge trading. You start seeing setups that aren't really there. You widen your stop loss just a little bit, hoping the trade turns around because hitting that stop would be catastrophic for your daily limit. You jump into a C-grade setup because of FOMO, the fear of missing out on a potential winner that could claw you back to break even. Your well-researched, back-tested strategy goes right out the window. You're no longer trading the market, you are trading your P&L. You are fighting the rules, not executing a plan. The magnifying glass has found your impatience. It has found your fear of loss. Or how about the profit target and the time limit? Let's say you need to make 8% in 30 days. For the first week, the market is flat. You're taking good trades, small wins, small losses, and you're basically at break even. In a normal trading environment, this is fine. It's professional. You're preserving capital, waiting for your edge to appear. But in the challenge, the clock is ticking. You can feel day 7 turning into day 8, then day 15. You're halfway through your time and you've made no progress toward the target. The panic starts to set in. I have to make something happen. You start to force it. You increase your risk per trade, thinking, I just need one good winner to get me going. You abandon your 1-to-2 risk-to-reward rule and start taking quick profits at 1-to-1 just to feel the psychological relief of booking a win, even though you're crippling your strategy's long-term edge. The magnifying glass has found your desperation. It has found your inability to sit on your hands and do nothing, which is one of the most profitable skills a trader can have. You see, the prop firm isn't giving you a shortcut to capital. They are giving you a high-pressure, artificial environment specifically designed to see if you will break. The fee you pay is for the privilege of sitting in a psychological pressure cooker. They are testing your emotional regulation, not just your market analysis. They already know that 95% of people who buy a challenge will fail, not because they can't read a chart, but because they can't read themselves. They crack under the pressure that the rules create. So you must reframe this entirely. This isn't a gift. It's the final exam you were never told you had to study for. And the subject isn't technical analysis. The subject is you. Chapter 2. The Invisible Enemy. You're not trading the market, you're trading the rules. You sit down at your desk. You've had your coffee. You've done your morning analysis. You've identified your key levels. You know the direction you want to trade, and you have your high probability setups in mind. You are, for all intents and purposes, prepared. But the moment you open the trading platform, the one linked to your evaluation account, a subtle shift happens in your brain. A second layer of analysis overlays everything you just did. Your focus is no longer purely on the chart. It's split. A part of your mind is now constantly running a second, invisible calculation. It's the voice that asks, okay, this is a valid setup, but if I take it, my stop loss is 50 pips. At my current lot size, that's a 1.2% risk. Can I afford that? What if it's a loss? That'll put me down for the day and I'll be chasing. The price is approaching my take profit level, but it's slowing down. My rule says to hold, but if I just close it now, I can bank a 0.8% gain. That gets me closer to the overall target. Should I just take it? What if it reverses and I lose the profit I had? The market has been dead all morning. The clock is ticking on my 30 days. I should probably just take any setup that looks halfway decent, right? I can't afford to let another day go by with no trades. Do you see what's happening? You're not trading your strategy anymore. You are trading the rules of the evaluation. Your decision-making process is no longer governed by your edge, by what the market is telling you. It's being held hostage by the fear of breaking a rule. This is the silent killer of prop firm traders, performance anxiety. But it's a very specific kind of anxiety. It's not just the fear of losing money. You felt that before. It's the fear of losing the opportunity, the fear of failing the test, the fear of being judged and found wanting. It's the fear of having to go back to your friends, your family, or just yourself and admitting that you failed, that you weren't good enough. This anxiety fundamentally alters your perception of risk. In a normal live trading account, you define your own risk. You decide that you're comfortable risking 1% per trade. It's a metric you control. In a prop firm challenge, the risk is defined for you, and it's absolute. That 5% daily drawdown isn't a guideline. It's a guillotine. It's a hard stop. Your brain knows this, and it becomes hypersensitive to any movement towards that line. A normal trading loss becomes a catastrophic event. A trade that goes into drawdown, even temporarily, triggers a primal fight-or-flight response. Your heart rate increases, your palms get sweaty, your breathing gets shallow. Cortisol floods your system. In this state, the logical, analytical part of your brain, the prefrontal cortex, starts to shut down. You're no longer the calm, objective analyst you were an hour ago. You're a cornered animal. And cornered animals don't make rational long-term decisions. They bite, they scratch, they do anything to escape the immediate threat. This is why you do things in a challenge you would never do on a demo. You move your stop-loss further away, praying for a reversal, because the pain of realizing the loss and moving closer to the drawdown limit feels unbearable. You close a winning trade far too early just to get the dopamine hit of a small win and alleviate the anxiety of watching it potentially turn against you. You double down on a losing position, a catastrophic error, because your panicked mind has convinced you it's the only way to get back to even. The very structure of the evaluation creates a state of cognitive dissonance. You have your trading plan, which is your objective truth. Then you have the evaluation rules, which create an emotional, fear-based reality. And these two things are constantly at war inside your head. Every single trade decision is a battle in that war, and it is exhausting. Mentally and emotionally, it drains you in a way that regular trading simply doesn't. By the end of the week, you're not just down on your account, you're a shell of your former self. You're second-guessing everything. The confidence you had gone, replaced by a gnawing anxiety. You start to hate trading. It feels like a chore, a burden. You sit down at your desk with a sense of dread, not excitement. The irony is that the prop firm is supposedly looking for profitable traders, but the very process they use to find them often prevents a good trader from trading profitably. It forces you into a short-term, outcome-obsessed mindset, which is the exact opposite of what's required for long-term success. You have to recognize this invisible enemy. You have to understand that the moment you feel that anxiety rising, the moment you start calculating your P&L instead of analyzing the price action, you have already lost. The battle isn't on the screen anymore, it's inside you. Chapter 3. The House Always Wins. The Gamification of Your Failure. We need to talk about the business model. And this might be hard to hear, but you have to understand it. You have to see the system for what it is, not what you wish it were. In 2025, the prop firm industry is a finely tuned multi-billion-dollar machine, and for a significant portion of that industry, the primary product isn't funded trading accounts. The primary product is the challenge itself. The product is the dream. The product is hope sold in monthly installments. Think about the language they use. Get funded. Pass the challenge. Level up. It's the language of video games. You are the hero on a quest. The evaluation is the level you have to beat. The funded account is the ultimate prize. And if you fail, don't worry. For a small fee, often with a convenient discount code popping up in your email, you can buy another life. You can reset and try again. This is the gamification of failure. It's a deliberate psychological strategy designed to keep you on the hook. It reframes your financial loss as just a temporary setback in a game you are still playing. Losing the $500 fee for the challenge doesn't feel like you just burned $500. It feels like you lost a round. The system encourages you to think, I was so close. I only failed because of that one silly mistake. I've learned my lesson now. This next time, I'll get it. Every reset you buy reinforces this loop. You are paying for another spin of the slot machine. The flashing lights and the celebratory emails when you hit your first few profit targets are the near misses that keep a gambler pulling the lever. They give you just enough encouragement, just enough of a dopamine hit to make you believe that the jackpot is just one more spin away. The firms have a massive data advantage. They have seen tens of thousands, if not hundreds of thousands of traders try and fail. They know exactly where the breaking points are. They know that the combination of a tight daily drawdown and a time pressure element will cause a predictable percentage of traders to engage in high-risk, desperate behavior in the final week. They know that offering a 20% discount on a reset within 24 hours of a failure has a sky-high conversion rate because it preys on your emotional vulnerability and your desire for immediate redemption. They are not necessarily malicious, they are just a business. And the most profitable part of that business model, for many, is the revenue from failed challenges, not the profit splits from the tiny percentage of traders who actually make it. The funded traders are in many ways the marketing department. They are the success stories, the social proof that the game can be won. They are the faces used to sell the dream to the next 1,000 people who will sign up and, inevitably, fail. This creates a dangerous psychological trap for you. You stop seeing yourself as a business owner, a professional trader managing risk, and you start seeing yourself as a player in their game. Your goal shifts subtly. The goal is no longer to become a consistently profitable trader for the next decade. The goal becomes to beat the game, to pass the challenge. This singular focus is why you abandon your long-term, proven strategies for short-term, high-risk tactics that you think might just get you over the 8% profit target before the clock runs out. You're trying to find a cheat code, a glitch in the matrix, instead of building real, sustainable skill. You become addicted not to trading, but to the challenge, the rush of starting a new evaluation, the hope, the what if. It's a potent psychological cocktail. And every time you fail and buy a reset, you're digging yourself deeper into a financial and emotional hole, all while telling yourself you're investing in your future. You must break this spell. You have to stop being a player in their game and start acting like the house. The house doesn't gamble. The house has a statistical edge and applies it relentlessly over the long run, immune to short-term outcomes. How do you do that? You have to see the evaluation fee for what it is. It is not a ticket to a lottery. It is tuition. It is the price you pay for a month-long masterclass in your own psychological weaknesses. When you fail, the lesson you paid for isn't over. It has just been delivered. Your job isn't to immediately pay for another lesson. Your job is to sit down, analyze the data of your failure, your emotional state, your impulsive decisions, your rule breaking, and learn. Until you can see the business model with clear eyes and treat your fee as a sunk cost for education, you will forever be a customer, not a professional. You will be paying them to show you your flaws over and over again without ever stopping to fix them. Chapter 4. The Ghost in the Machine. The challenge will find your weakness. Why do you want this so badly? No, really, take a moment. Stop thinking about charts and strategies and profit targets and ask yourself that question. Why are you, specifically, so drawn to the idea of passing a prop firm challenge? What is the emotional driver behind it? Because whatever that driver is, you can be certain of one thing. The pressure of the evaluation will find it, grab onto it, and use it as a weapon against you. The prop firm challenge is like a diagnostic tool for your soul. It will ruthlessly expose the weakest parts of your character. The market itself is an impersonal force. It doesn't know you. It doesn't care about you. But the challenge? The challenge is deeply personal because it forces you to confront yourself under pressure. And the ghost in the machine, the reason you ultimately click the button that blows your account, is almost always an unresolved psychological issue that has followed you your entire life. Are you an impatient person? Do you hate waiting in line? Do you get frustrated in traffic? If so, the challenge will punish you for it. It will present you with a slow, grinding market for 3 straight weeks, testing your patience until you finally snap and start forcing trades that aren't there just to do something. And then, poof, account gone. Do you have a deep-seated need for external validation? Do you need others to see you as successful? Perhaps you grew up feeling overlooked, or you're in a job where you feel unappreciated. The promise of a 200K funded trader title becomes an incredibly seductive way to finally get that recognition. But this need for validation makes you terrified of failure. A loss isn't just a loss. It's a personal indictment. It's proof that you're not as smart as you think you are. This fear will make you risk-averse when you should be aggressive, and reckless when you should be patient. You'll be so focused on how you look to others if you pass, you won't be able to execute the simple steps required to actually do it. What about a fear of scarcity? Did you grow up in a household where money was always tight, where there was a constant feeling of not enough? If so, that fear is embedded in your nervous system. When you're in a trade that's in profit, that scarcity mindset screams at you. Take it now. Take the money before it disappears. You might not get another chance. So you consistently cut your winners short, grabbing tiny profits, while your strategy requires you to let them run to achieve its edge. Your childhood fear is preventing you from being a profitable trader as an adult. Or maybe it's arrogance. Maybe you're smart and you know it. You've been successful in other areas of your life, and you came into trading thinking you'd figure it out in a few months. When you face a string of losses, your ego can't handle it. It's an affront to your identity. The market is wrong, you think. This move is irrational. So you hold on to a losing trade, convinced it has to turn around and prove you right. You might even add to the loser, doubling down on your own arrogance. Your need to be right becomes more important than your need to be profitable. The challenge doesn't care about your IQ. It will use your ego to liquidate your account. These are not trading problems. These are life problems. Impatience, need for validation, fear of scarcity, arrogance, these are the ghosts in your machine. You carried them with you for years in your career, in your relationships, in your personal life. In those arenas, the consequences might be subtle, but in the hyper-pressurized zero-sum environment of a prop firm challenge, these flaws are fatal. There is nowhere to hide. That one impulsive trade that breached your daily drawdown, it wasn't a trading mistake. It was the culmination of a lifetime of impatience. That revenge trade you took right after a loss, that wasn't bad risk management. That was your ego refusing to accept being wrong. That winning trade you cut short for a tiny gain, that wasn't a strategic decision. That was your fear of scarcity whispering in your ear. This is the hardest truth to accept. It is so much easier to blame the firm, to blame the algorithm, to blame a manipulated market move. It's so much harder to look in the mirror and say, the problem is me. The problem is my relationship with risk, with patience, with failure. Until you do this work, the deep, uncomfortable work of self-examination, you will remain trapped in the cycle of failure. You can buy 1,000 challenges, you can learn 100 new strategies, but you will always bring you to the table, and the challenge will always find your weakness. Stop trying to fix your chart reading and start trying to fix yourself. That is the only path forward.
Chapter 5. The Path Forward. Divorce the outcome. Marry the process. So what do? If the whole system is a psychological minefield, if it's designed to make you fail, if it preys on your deepest flaws, do you just give up? Do you walk away and resign yourself to the fact that it's an unwinnable game? No, absolutely not. You change the way you play the game. You stop playing their game and you start playing yours. You fundamentally redefine your relationship with the entire process. The path forward is not about finding a new strategy or a better firm. It's about a radical internal psychological shift. It all boils down to this. You must completely and utterly divorce your emotions from the outcome of passing or failing. Let me say that again. You have to get to a point where, deep in your core, you do not care if you pass this specific challenge. The outcome, the funded account, must become irrelevant to your actions in the present moment. Your goal is not to pass the test. Your new goal is to execute your trading plan flawlessly for 30 consecutive days, regardless of the result. Your focus must shift 100% from the outcome to the process. Here's what that looks like in practical emotional terms. First, you must treat the evaluation fee as a sunk cost. The moment you pay it, that money is gone. It's not an investment you're trying to make back. It's not a loan you have to repay. It is the tuition fee you paid for a 30-day membership to a high-performance trading gym. That's it. You will never see that money again. Accepting this emotionally neuters the loss aversion that causes so much bad decision-making. Second, you must treat the evaluation account as if it is already a $1 million live account that you own. This means you trade it with professionalism and patience. If your strategy dictates that there are no valid setups for 3 days, then you do not place a trade for 3 days. You don't care about the 30-day time limit. Why? Because a professional trader with $1 million account doesn't force trades to meet an imaginary deadline. They wait for their edge. If you time out of the challenge with a 1% profit, but you followed your plan perfectly, that is a monumental victory. You have proven you have the discipline of a professional. That is infinitely more valuable than passing by gambling and getting lucky. Third, you will create your own set of rules that are more important than the prop firm's rules. Your primary rule is no longer don't breach the 5% daily drawdown. Your new primary rule is, I will follow my trading plan without exception. Your goal is not to stay above the firm's line in the sand, but to stay true to your own process. The funny thing is, when you focus entirely on executing your process correctly, you will naturally stay within the firm's risk parameters as a byproduct. You're no longer fighting their rules, you're simply executing yours. Fourth, you will conduct a ruthless post-mortem on your process, not your P&L. At the end of each day, you will not ask, how much money did I make or lose? You will ask, did I follow my plan today, yes or no? You will keep a journal, and your only metric for success will be a check mark for, yes, I followed my plan, or an X for, no, I deviated from it. If you have a winning day but you broke your rules, maybe you got lucky on an impulsive trade, that is a failure. You mark it with an X. If you have a losing day but you executed every single trade according to your predefined plan, that is a success.
That gets a check mark. You are training yourself to derive your emotional satisfaction not from profit, but from discipline. This approach is incredibly difficult because it requires you to delay gratification. It requires you to let go of the very dream that got you started. But it is the only way to build the psychological fortitude required to actually manage real capital. The prop firms are ironically looking for traders who don't need their money. They are looking for traders who are so process-driven and emotionally detached that passing the challenge is just a natural consequence of their everyday professionalism. Stop trying to get funded. Start trying to become the type of person who gets funded. Focus on the process. Follow your plan. Judge yourself by your discipline, not your equity curve. Do this, and you will stop being a customer who buys challenges, and you will become a professional who earns accounts. The funding isn't the prize. Becoming the trader you were meant to be, that's the prize. The money is just the receipt that proves you've done it. Conclusion. So here we are. At the end of it all, what is the one thing they don't tell you about trading prop firms in 2025? It's that the prop firm is not your savior, and it is not your enemy. It is a mirror. That's all it is. It is a perfectly clear, brutally honest mirror that reflects back at you not the trader you think you are, but the trader you truly are in moments of pressure, fear, and greed. It reflects every flaw, every insecurity, every ounce of impatience and arrogance you possess. It shows you the unvarnished truth of your psychological state. For years, you have been able to hide from this truth. On a demo account, there are no consequences, so the reflection is blurry. In books and videos, it's all theory, so the reflection is hypothetical. But the moment you enter that challenge, the mirror becomes crystal clear. And for most, the image it shows is terrifying. The person staring back is not the calm, disciplined, professional trader from their imagination. It's a gambler. It's an addict. It's a scared, impulsive person making decisions based on raw emotion. And the natural human reaction is to blame the mirror, to say the reflection is distorted, to get angry at it, to try and break it. You blame the firm's rules. You blame the market. You blame your mentor. You blame anything and everything to avoid accepting the reflection as your own. But your path to freedom, the real freedom you're searching for, only begins when you stop fighting the reflection and start accepting it. It begins when you look into that mirror, see the flaws, and say, okay, that's me. That's my starting point. Now let's get to work. The work is not finding a new indicator. The work is cultivating patience. The work is not finding a new firm. The work is developing unshakable discipline. The work is not about passing a test for someone else. It is about mastering yourself. Stop buying challenges and start building your character. Spend the next months not trying to hit a profit target, but trying to follow your plan with zero exceptions. Derive your pride from your discipline, not your P&L. Become the professional in your mind first. Build the psychological foundation so strong that no drawdown, no time limit, no external pressure can ever shake it. Do that work, the real work. And when you are truly ready, the funding will be nothing more than a formality. It will be a simple byproduct of the person you have become. The mirror will reflect back at you the image of a professional trader, and you will finally be able to look at it and say, yes, there you are. I've been waiting for you.